Welcome to Real Estate Live, where your questions get answered. We get to the point with the hot topics on everyone's mind. Today's hot topic is about buying a house after forbearance. Is it possible? And how will you know what to do next? To tell us more about this is Bill Merren with New American Funding. He's going to share the scoop about what's going on with mortgage forbearance. He's going to give us the mortgage rates for today and let us know if any other things that you should be aware of this week with mortgage market updates. My name is Andrew Finney. I'm your host here in Las Vegas, Nevada with King Realty Group. We're looking forward to a great time with you. And as always, please feel free to use the chat to ask us a question directly. Hit the link in the description if you want to join us on screen. And now let's get after it. Good morning, Bill.
Good morning, Andrew. What's going on, buddy?
Hey, it's good to see you, my friend. I like your blueness back there. That looks like a big old safe that you got back there.
Thank you. Appreciate you, man.
Is that the safe that you guys use for loans, to issue loans?
Yeah, that's where the money comes from.
That's where the money comes from.
Yeah, not at all, man. But good to be back, man. It's been a couple of weeks.
It has been, and it's good to have you back. So why don't we go ahead and break down right into it with mortgage rates? What's the scoop today?
Yeah, so today, first off, to start the day off, we're recommending that if you are in a position to where you have not locked your loan yet, if you're just went into contract, you got a few weeks out, or maybe you're looking at a potential refinance, we're recommending maybe not lock. We're recommending floating for the time being, primarily because if you've been kind of paying attention to the news and different things that are going on, from both sides of that discussion, there is some fears and talk of there being more COVID cases coming up, and there is a bit of fear coming of there possibly being a second wave, which has been being talked about this whole time. But was a great run. Rates were very, very good. The stock market this morning opened up down pretty sharply, which does potentially have a positive impact on the interest rates. So, which is why we're recommending that if anybody is not closing within the next couple of weeks, and you have the ability to float, I am recommending that my clients do float that interest rate. So that is what we're recommended today, just because, again, they might get a little bit lower, and at any moment we could get an alert to lock because the market's moving the other direction. But as we're seeing right now, I'd say float.
Okay, very good. So right now the recommendation is if you're a week or two from closing to just float and then talk with your loan officer about the best time to lock. So what if somebody's closing this week? What would you suggest if they're not yet locked?
Yeah, lock right away.
Lock right away.
Yeah, if somebody's closing within the next 2 to 3 weeks, I would say absolutely lock your loan, because you don't know what could happen. One thing that's said either way could impact the rate. It could cause a rate to go up, and hey, you might be on the bubble. You might be on the point where your debt to income ratio is so tight, and maybe your lender hasn't told you. And then, Andrew, this, man. If rates go up 0.25%, that the deal could be hosed, or you might have no other option but to buy down the rate, and you'd have to come in with an additional pretty large chunk of money to do that.
That's a good point. And what are you seeing, just out of curiosity? I know you loan officers always love when I do this, but what are you seeing as a prevailing general termed rate? I know it's different by loan program and application, but if there was a general consensus of like a benchmark number, what is that right now?
So I have some exciting stuff to share, man. I don't sell rates because I don't need to. I sell service, right? But rates are really good.
Right.
And my rates are very, very good, very competitive. I do not have an issue competing with anybody. But some very exciting stuff. I actually closed the lowest interest rate I have ever closed in a 15th year, 15 years doing mortgages, which is freaking awesome. Lowest fixed rate was actually a 15-year loan. It was a conventional loan, 2.375% interest rate on a fixed 15-year loan. And the guy was paying 1 point. So he rolled 1 point into the loan. But oh my gosh, we saved him. His payment was just a little bit more than he had like 5.5% 30-year. His payment was a little bit more than what it was before. And now his home's going to be paid off in a fraction of the time, saving tens of thousands of dollars. He's just happy. I told him, like, man, this is just bragging rights for me because I never thought I'd close the rate this low. It's amazing.
Well, when's my turn at 2.375? That sounds attractive. So
yeah, no, you can, brother, man, but you got to go to a 15-year and do that. But no, so everybody's scenario is different, Andrew, like we've talked about before. And when it comes to buying a home, you see a lot of things advertised, just like myself talking about 2.375. But everybody's situation is different. A lot of loans are based on credit score. So right now what we're seeing is when it comes to VA purchase, you're looking right below, 3%, maybe 2.75, 2.75. I had a guy lock in last week at 2.625, had good credit. I think they had like a 725 FICO on VA, and they were rolling in, I'm sorry, excuse me, they were getting back about $700 towards their closing costs out of 2.75, which is phenomenal. And then also had conventional, you're putting down 5%, you have good credit, you're looking probably 3.25, maybe paying a half a point, just depending on what bucket you fall into with the credit scores. And then FHA, again, around 3%, 2.875, right around there.
Awesome.
So phenomenal rates.
That is.
Really
so the
good.
good news is that people are still getting amazing rates, and we know that rates are going to probably go up in the future. But right now, your recommendation at the end of the day was to float if you're closing within the next 2 to 3 weeks because of the news and the way that it's shaping up in the market, right?
No. If you're closing within the next 2 to 3 weeks, lock your loan immediately.
Lock your loan immediately.
Yeah.
See, that's why we ask questions.
Yeah. Yeah. If you are not needing to close right away, if you just went into contract and you got 30 days, 45 days, or if you're in a refinance situation, kind of hold out maybe a couple days and see if the market improves. Because again, when the stock market kind of takes a little bit of a dump, we typically see a trail end of that of the rates maybe improving a little bit. And by improving, that might be 1/8% in rate. So maybe from 2.75 to 2.6, or maybe that 2.7 is no longer costing you a point to get it. Maybe now it's costing half a point. So it's not a drastic improvement, but it just makes sense mathematically. So
good stuff. Thank you for your advice there, Bill. So with the mortgage market updates, what are you seeing shape up right now? Because I know that we want to dive into buying after forbearance. It's something that's been coming up. We've seen forbearance numbers stalling, which is good. They're starting to go back down. And then you and I were having a pretty fun conversation. And by the way, I did check. I did check. But more on that in a moment, right? Good. What mortgage market updates you got for us that we should be keeping in mind before we get into the hot topic?
So guidelines are continuing to loosen up. There is guidelines that are kind of, a lot of programs are starting to come back with a lot of lenders. A lot of my competitors I'm seeing are kind of slowly starting to like come back to like where we're at, where we've been at for about a month now. But even a lot of our kind of outside the box guidelines when it comes to bank statement loans and all that is already back, but the guidelines are still, it's a little bit of, you need a little bit more down payment, might need a higher credit score in some situations. But a lot of programs are coming back, and I want to urge people to just keep the faith and just understand that the crash of 2008, 2010 is not what's going on now, right? It hasn't been going on. I believe what you and I have been talking about this whole time and instilling confidence in people, that's not what was happening because it's just a totally different situation. There is a lot of positive things going on and the market is bouncing back. And I think, Andrew, I saw you guys do, I can't remember the gal that was on there doing the V curve video with you. That's absolutely happening. I mean, absolutely happening. There will be peaks and valleys in that, but it is absolutely happening. So I urge people just to keep the faith, keep watching these videos. And if you got any questions, reach out to me about mortgages, any questions you got. And then Andrew, real estate expert, man, trust him 100%, dude. So
fantastic. Thank you for that, Bill. And by the way, all of that great information and how to reach out to us is in the show more description below the video on both Facebook and YouTube. So bringing that full circle, let's go back to forbearance. And I know that back to that comment about why I checked, right? Because I was so concerned because my mortgage was not pooled automatically on the first of the month. And that's when I normally check, okay, make sure that everything is good to go because I don't play with mortgage, it's auto deduct, right? And then I think you and I were chatting last week and I hadn't seen the update yet. I was like, Bill, did I get forbeared upon without even knowing I got forbeared upon, without even asking or even doing anything? And the reason that that's important is because when we see the numbers with mortgage forbearance, my curiosity is how many of them were automatically put into forbearance without a request, without being even a phone call to the service provider. And how many of those numbers are like that out of those millions of people that are currently considered to be mortgage forbearance? Is it like 10%? Is it like 50%? Because this is how we get to the truth of what's going on with everything in its totality, right? So that's why I thought it was really important. Now, I can share with you this, right? You'll be happy, right? The service provider said, I'm good to go. So they did pull it. They just pulled it later than I'm used to seeing them pull it. It was like a week or two later. It's like, oh, wow. Normally I'm used to seeing them, they want their money. And it's like, I see the debit charge coming in the pending, like the day before.
Well, and dude, the reason
I was afraid, I was like really afraid. I was like, I don't want to be forbeared upon. How do I get out of this?
Well, we were talking, right? Because a lot of my clients that come to me, whether they find us on YouTube or Facebook or wherever they, I meet them at the park or whatever, out with my kids. A lot of people that are wanting to refinance are, Wells Fargo owns a lot of mortgages, and a lot of other companies like Bank of America and all these different places. And I'm not going to name like specific lenders who did this, like the big banks.
Not to name names, but they're big.
Not to name names, but I just did. So a lot of these lenders are these mortgage companies. I believe the reason they probably did it is because they probably tried to get ahead of that curve, because there was going to be so many people. There was such a large fear of this massive meltdown, and there was going to be all these people needing forbearance. Everybody's going to apply, and they weren't going to be able to get to them. So and this is just my opinion, I don't have this verified, but what I believe they just kind of tried to get ahead of that curve, and they just went into massive amounts of loans and just put everybody on a forbearance. The clients didn't know about it, so it wasn't affecting their credit. They weren't missing any payments. But when I go to refinance them, they were specifically with a couple of the larger banks. Several of my clients that are now, a couple of them are closed and a couple of them are working on right now. They were in a forbearance on their mortgage and they had no idea. So didn't affect their credit. They didn't know about it. They kept making the payment, but I saw on their credit report that they were in a forbearance. So that's how that came up. And that is, it's something important to kind of think about too, because there's so many statistics because you can skew them one way or another. And really, truly, how were those forbearance numbers? How did they come up with that? Is it based on, I don't know. I mean, maybe somebody else would know this, but was it based on actual forbearance applications? Or was it based on the amount of people that were put into forbearance, including the people that actually applied for it and the ones that didn't even know about it?
And I think that's a really good point. And
Yeah.
I really want to drill down on that. So my suggestion to anybody watching during the live or after the fact, and if you're after the fact, just joining in, thank you so much for joining in. And to everybody that's here, of course, thank you for joining us on the live stream. The reason I think that's so important, and the big suggestion that I have before I get onto that, is that if you notice that your mortgage has not been paid, or you haven't checked in a while because maybe you're like me and you do the auto deduct and you just assume everything is good to go, please don't assume that. Please make sure that you go into your service provider account and make sure that your mortgage is still coming out, or go into your bank account, because obviously that's a pretty quick way to know if you got paid or not too. But just make sure that you're not in that situation. And if you are in that situation and you did not intend to be, call them and get out of that situation if that's your desire, but it's important. And where I was going with this, the reason these numbers are so important, as you mentioned, Bill, is that they can be skewed one way or another. And part of the problem that I have with that is, sometimes there's a jump to make news, or there's a jump to release the most up-to-date or trending information. The issue with jumping before is that you can make mistakes. And when people make mistakes and they start saying X number of people are unemployed, or X number of people were fired or furloughed or whatever, all of the things that we've been hearing over the last 3.5 months, right? It causes fear. It causes anxiety. And the whole premise to me is that we need to move beyond fear. Fear is false evidence appearing real. So the way that we do that is we get facts and we gain clarity. And when we see how many people were being forbeared upon, and there was articles in like Housing Wire, Mortgage News Daily, there was articles about this MN News within the industry about people getting forbeared upon that did not know, or that was going on. So when you hear those numbers, we got to take it with a grain of salt, shake it down, figure out what's really going on, so we can truly discern what's happening with the economy and truly discern what's happening with people's positions, because then we could dispel that fear. And remember, we're always stronger and better together than we are not. So if anybody has some insight on this, please let us know. We learn, we grow together. So that was my thought, Bill.
Yeah, no, and like the point of talking about the forbearances, because it's affecting a lot of people. And there was, so many people needed it. I mean, there was a lot of, especially here locally in Las Vegas, man, the everybody on the strip and all that. I had so many clients that were pre-approved out home shopping. It was going to be their year to buy the home this spring. And then, hey, it was out of our control. It didn't happen. So some of these people had to go into forbearance on different like car loans and auto loans and this kind of stuff. But specifically regarding mortgages is what I really want to talk about today, because a forbearance on a mortgage is different, right? It's if somebody really if they had that tough situation where they had to go into forbearance and they truly started missing mortgage payments, if they started missing them because of that was their forbearance time period. These guidelines are continuing to come out. They're continuing to get updated. But as of right now, what we're seeing at New American Funding, what we're going to allow is the first thing somebody has to do is, if they're in a mortgage forbearance, if they're in a forbearance type situation, this goes for auto loans, credit cards, any of that type of stuff. If you're in a forbearance, student loans, you have to call. No, student loans are different.
Okay.
If it's a COVID thing, so student loans are different. But if it's an auto loan, credit card, or mortgage, clients need to actually call up to their loan servicer and cancel that forbearance. They're going to have to get a formal cancellation of the forbearance plan. And then if it is a mortgage forbearance, they're going to have to have, and if they've actually missed payments, they're going to have to become current, whatever that means to that specific lender, and they're going to have to make 3 payments on time before we will actually allow them to do another mortgage. So that's something to kind of think about. It's because I've heard a lot of people say, hey, if you go into forbearance and you start missing payments, it's looked at like a short sale or foreclosure. Simply not the case. It's not. It's absolutely a lot better than going down that path. Mm-hmm. But if they are in forbearance on a mortgage and they have missed mortgage payments, got to cancel it and then got to make 3 on-time payments, and then we can turn around and do a loan for them 3 to 4 months later. So it's kind of the way out of that. Again, those guidelines are getting updated as we go. So if they do change, we'll do another chat about this. Another thing I've seen a lot of, Andrew, and I've actually seen this more, thank God, than the other, is there's somebody that's actually applied for forbearance. They're in forbearance, but they're continuing to make their credit payments, whether it's, whatever that situation is. They're continuing to make their mortgage payments. Those mortgage payments, if they're continuing to be made, but they're in a forbearance, they know about it, all they have to do is call up their servicer, cancel the forbearance, get a cancellation confirmation. We make sure they've been making their payments, so we got to get everything updated on our end, and then they can go turn around and purchase immediately. So that is kind of in a nutshell. I mean, it's there were a lot of people that did need help with that, but specifically regarding the mortgage forbearance, if somebody had to go into it, just pick up the phone, give us a call, and we can kind of walk you through the steps to take to be able to buy.
That's awesome. So at the end of the day, it's just really good just to simply pick up the phone and make the call. Doing so will iron out a lot of issues here. So Bill, is there anything else that you'd like to share with us on the forbearance before we start going into questions?
That's pretty much it. Just the biggest thing is just be in communication with your lender. I mean, I would love to help people out, Andrew. You know that. I mean, I would love to work with great people. So if anybody has any questions, you can always pick up the phone, call me, text me, whatever. But just regardless of your situation, just be in contact with, if you're not going to work with me, reach out to your lender that your real estate agent, your real estate professional recommends, and just be in constant communication, because that's going to be, just be open, open communication, because that transparency is what's going to help have your, make sure you have a successful process.
Absolutely. Thank you for that, Bill. So why don't we go ahead and get right up into our favorite part with the viewer Q&A. I saw a few comments come in, so let's go ahead and get to it. Alex Miranda, thank you so much for joining in. Alex, it's always great to hear from you, my friend. And you were actually on my mind this morning. So I suppose, great minds think alike. That's what they like to say. So I know that you're actually going to be one of the people that Bill's talking about reaching out to him soon, Alex. So thank you for joining in. We're looking forward to getting the work for you. Carrie Meyer says, we need help. We don't know what to do to qualify for a larger home. Do we pay off our debt so we can qualify for the mortgage amount? Totally lost here. And by the way, it's on a disabled VA home loan. Bill?
So first thing is, what lender are you working with? Because different lenders have different guidelines and allowabilities when it comes to VA. It sounds like it could potentially be VA. You didn't clarify there, but it sounds like it might be VA or commit, whatever that loan type is that you're doing. Different lenders do have different allowable guidelines for debt to income ratio. So specifically, some of the larger banks, a lot of us veterans default to going to use and trust, just because it's kind of what we knew when we were in the service. It's what people recommended. Sometimes they have much more strict guidelines than like somebody like myself, for example. All we do is mortgages. We can go a little bit higher in debt to income ratio. So that's the first thing. I would say, who are you working with? And I would maybe get a second opinion on that. The second thing is if you said you have a VA disability, it sounds like, you can actually do what's called gross up, or your lender probably already is doing it, but they could potentially gross up your VA disability, meaning giving you more income for that VA disability, just to help out your debt to income ratio and helping you qualify. So I hope that answers that question. And if you got any more questions about that and you want to just get a second opinion, just please pick up the phone, give me a call, shoot me a text, whatever you got to do, and I can see if I can help.
So good stuff, Bill. So Carrie's also letting us know that it was just a mortgage broker that they bought their current house, so they presently own, last year. And yes, it is a VA home loan.
Cool. Yeah, I would definitely get a second opinion, just so you know.
Perfect. And when you're talking about second opinions, just to give you a quick heads up, obviously I have Bill's contact information up right there. If you'd like to reach out to Bill directly and see what he can do to help out, please feel free to do so. And in case it's more convenient or easier for you, it's always in the description below. Whatever your choice, his website is billmerrenloans.com. Please feel free to reach out anytime. We're happy to help out. So, Mr. Merren, let us go on. Nathan. Hold up, I skipped over, sorry. Richard White, thank you for joining us. Richard says, rates are going to go up. They always do. Your thoughts?
Yeah, I mean, rates are always moving. They always move. Yeah, so they are historically low right now. In 14, 15 years of doing mortgages, I've never seen fixed rates this low for this long. I mean, there's been little bumps to where they went low for a very short period of time, but we're going to see a significant length of time for these rates are very good. Will they go up? Absolutely. So Richard, great comment. Great thing you're putting out there, because rates are going up. And I've heard a lot of people saying, hey, I want to wait to buy. I think rates might go lower. That could be a mistake. You know, we're talking about earlier when we started the show, started this conversation was, hey, maybe wait a day or two to lock, not wait a year or two to buy. Because if you can qualify now at below 3% or even below 4% on an interest rate, that's historically low. But like Richard did say, Andrew, man, rates are absolutely going to be going up.
And I thought it was pretty interesting because when you look at like opportunity cost of time, right? And specific when you're talking about not only could the rates go up, which can dramatically impact the amount of home you can get approved for, to Carrie's point when she's asking how can they qualify for to qualify for more home, right? You also have to realize the realities of the real estate market. And because of all the different reasons that we've been discussing for these past 3 months of live streams and different videos I've put out about the housing market and how to know what's going on with trends, indicators, and conditions, we keep sharing with everybody that the facts, that it's not going to be a 2008 situation for so many different reasons. And that's why we keep going live and talking about this and answering questions. But that being said, the real estate market is also going to appreciate slowly over time, right? So if a home that's worth $300,000 today appreciates just 3%, which is the historical average for real estate, then that means that same $300,000 house a year from now could be $309,000. Now, what that actual appreciation rate looks like is a different story. It could be 1% one year, it could be 10% the next. We've seen both of those in just the last several years alone. So it's important to take stock of that. The best time to buy a house is whenever you're ultimately ready to buy a home for the reasons that are important to you at the time that is right for you in your life. You don't want to buy a home due to the market. You want to buy a home due to your life. And you also, on the flip side of that, if you think about selling, it's the same story. It's about your life story, about your life journey and where you are in it so that you can make a well-informed decision. So I ask everybody just to please, take stock of everything, ask your questions here, do whatever we can to help out so that you can gain clarity and focus on what's most important to you. Doing so will see you successful. So I think that's a really good point, needless to say. JK, hey JK, thanks so much. Good day, people. Finally got on the live. Well, JK, I'm super happy that you did. Now, Bill, you may not know, but JK and I go back and forth on comments all the time. So she's, JK's always like hitting up different videos from the Hernandez family reality show, which is cool. super fun. If you want to see what it's really like to buy a house, we have that 14-part series out there that's available to see the whole entire home buying, lending, title side of what it's like to buy a home in a very much informational type reality show. It's a lot of fun. And, the Hernandezes always come up with some funny stuff that they do anyways. So JK, awesome, long story short, thank you for catching the live. Really appreciate that you're here. It means a lot. Daniel Liu says, are brokers doing jumbos, non-conforming? 2 weeks ago, I spoke with one who said only big banks are doing jumbos. That's really interesting because, Bill, that was one of our hot topics about the same time ago, 2 weeks ago. Let's let you get after it, my friend.
Yeah, man. So Daniel, awesome question. That is one of the hardest hit markets with this whole COVID thing, which did happen. There's a lot of lenders out there, mortgage brokers, mortgage bankers, big banks. Everybody across the board got hit with that. There was a lot of jumbo program, like literally overnight was like, oh shoot, like jumbo loans are gone, right? There is still a lot of lenders out there, mortgage brokers, big banks are not doing jumbo loans at all. A lot of them have kind of temporarily pulled out of them, hopefully it's temporarily, pulled out of that market altogether. That being said, they are still there for sure. We are a New American Funding. We are a mortgage banker. We are not a broker. I have the ability to broker when I need to, but I just closed one. I closed one in 2.5 weeks, and Andrew, it was actually like right the day we were doing our video. It seemed like it was when I first got this application coming in. I was able to step in and help out this family because their lender that they were using with the home builder was not able to perform because their guidelines and their programs just went away. So yes, we do have those programs available. There's a lot of different things out there. Jumbo is very different than conforming, the lower loan amounts, FHA, VA, conventional. There's a lot of niche things that we can do, including, and we still have it, is what's called bank statement loans for self-employed buyers, to where you can come in, you can buy a home, you can go, above that conforming loan limit. So you can be up in the, $500,000 plus price point with a bank statement loan, which currently is sitting at 25% down. We are thinking and seeing that should potentially come back down to hopefully 10% towards the end of summer, maybe into the fall time this year. And then regarding regular jumbo, depending on your price point, we do have an option on jumbo for individuals to come in if you qualify full doc type loans, to where you can come in with as little as 5 to 10% down. 5 to 10% down on a jumbo loan. And there's a way that we work that. There's a way that we go about doing that, which is splitting the loan up into two, doing a first and a second, which is a fixed loan first and a fixed loan second, where you're putting yourself in a great position to be able to not have to come in with 20% down or more. So there is still jumbo loans out there, guys. If anybody seeing this video is wanting to get more information about that specifically, these types of loans are hyper specific to your situation. So please give me a call, send me a text, or just go online and apply on my website because there is still a lot of options out there for jumbo financing.
Thank you for that, Bill. I know that it's a really hot topic, and we're talking about creating a whole special series about jumbo loans and high limit VA. So everybody, let's get after Bill so that Bill finishes his outlines and we can get together and collaborate on this videos because there's new ones coming. We've been talking about it for, oh God, it seems like forever, but they are coming. And Bill and I are getting ready to start cracking down on that content so that in recorded fashion, you'll have it to play back with all the little pop-ups, all the different links, and everything that you'll need to best make sense of exactly how that'll work, and really start going down in an instructional method of everything he just said and make it visually tangible so it's easier to understand. So anyone that has questions, though, of course, please feel free to reach out to Bill. We are ready to help. So Carrie, thank you so much for the next comment. Carrie said they pulled out our payment 5 days late, had her sweating. That's what I felt like, Carrie. So, like two peas in a pod right there, my friend. I was sweating bullets too whenever I didn't see my mortgage pull out. I thought, uh-oh, I don't know what's going on. Called Bill. Bill, what's going on? So, hey, good stuff. I'm glad that they ended up pulling it, and you could probably not sweat as hard too. That's why we wanted to talk about that and share that too. So Nathan says, hey, thanks for the update. One of our student loan auto drafts continued while the other one didn't. With a 6.5% interest rate, we want to continue paying during the pandemic. Any thoughts as it pertains to like the CARES Act that was passed and how it impacts student loan auto drafts and stuff? Do you have a point of reference as a mortgage loan officer, what they should do in that situation, Bill?
Well, I would say this goes for every type of credit line that you have: mortgage, student loans, cars, credit cards. If you can continue making your payment, you're always going to be better off by doing so. So Nathan, it looks like you did say that you want to continue making your payment. If you can, I mean, if you're working, if you have income coming in, or you have assets in the bank and you can continue making your payment, I absolutely would do that, depending on what type of student loan that you have, whether it's through just the different government entities, or whether it's through some type of private student loan, however you have that student loan set up. I would go on there, and if it didn't auto draft and you want to make your payment, you can. I would go on there and manually do it, whether you can do it online or just pick up the phone and call that lender. That's what I would do. Good
stuff, Nathan. So go ahead and give them a call and iron that out, especially if you do want to continue paying, as you mentioned in your comment, and let us know how that turns out. It'd be great to hear from you again, my friend, and thank you for joining us today. Gloria Portugal says, how do collections affect getting approved for mortgage? I know you got a thought or two about on this, Bill.
Well, it comes up a lot, man. There's so many different types of collections that happen. The most ridiculous ones, in my opinion, are the medical collections that people get. I mean, crap, I've gotten an $18 medical collection. I've gotten an $80 medical collection. I didn't even know that we had them, because they would have called us. We would have paid them, right? but they are a real thing that do affect. The first thing that it does affect is your credit score. So if you have a large collection that is on your credit, or a history of several collections that are on your credit, it could potentially bring your credit score down to a point, Gloria, to where you might not be able to qualify for that mortgage. That's definitely how it could affect it. Now, what I always recommend to my clients is when I get an application and I look at the credit report, and we take a look at it and we see, what type of loan program you're applying for. We go ahead and we run, as long as it's not a jumbo loan, if it's a standard, conventional FHA, VA purchase or refinance, we run what we call a desktop underwriter. So we run that through our system. We run it and we see what does that say about those collections. Typically, if they're medical, they do not need to be paid off. Sometimes they might. It doesn't really happen too often. If they are a non-medical collection, a lot of times they will be required to get paid off prior to closing escrow. So what I always just suggest when it comes to that, if you're already working with someone and they have your credit report up in front of you, I would just call them, break it down, see what they actually require. Because some lenders don't just go off of that desktop underwritten approval and those results that are on there in detail. They'll go off of their own internal guideline. We call them overlays, which is like the basic guidelines. Well, we go off of a New American Funding, but then there's also overlays to where they add additional guidelines on top of that, to where they may not allow you to have any collections that are open at time of closing. So again, just depends on what type of collection it is, and it depends on if your score is at the point to where you can qualify.
I'm glad that you were bringing that up, because when you start talking about desktop underwriting and the way that lenders actually issue a true pre-approval letter with verifying the income, assets, credit, and employment, I know that sometimes people that we have spoken with and we've been giving them the absolute best service and absolute best information, it just may not have been the information they wanted to hear, but it was a true information. They get frustrated. They go and talk to another loan officer. Oh, they said that I can get pre-approved. And then the question that I always have, was your income verified? Were your assets, your credit and employment situation verified? Because what I know in helping well over 100 families with you personally, right? Out of the 170 plus closings that I've had in my young real estate career, or almost 7 years coming up here in a few months. But that said, what I've learned is that if you're unable to get them a loan pre-approval letter, you have a game plan with them on backup. Right. And there's a reason why they weren't able to get a loan pre-approval. And I wanted to dig a little bit deeper on that just briefly, for the simple fact that if you apply for a mortgage, if someone's watching this and they apply for a mortgage and they have a loan officer that said, hey, we got back the desktop underwriting, we're going to have to submit this to manual underwrite. So an actual underwriter takes a look at everything to see if there's a will, there's a way to help you get a home loan pre-approval. Then just know that's part of the mortgage application process. Oftentimes, it's really easy to think that getting a mortgage loan is a lot like, well, I want a new car, and I went out there and I applied and they gave me whatever I wanted. Of course they did. They don't care whether you can repay it, because they repossess the car. And they don't have to, they're not under the same guidelines that loan officers are under about having to make sure that you can actually repay your mortgage. So it's important to take stock of that. And that's why I wanted to bring it up, because I know that's an irritation of a lot of different people that I've sent to you over the past month alone. Is their situation isn't 100% there yet. And some of them are going to be ready in a month. Some of them are going to be ready in 12 months or longer. It just depends. So I really appreciate you bringing up the desktop underwriting at the end of the day. That's where all of this is going, is just how intense and in depth this goes, and not to get discouraged if your initial application is kicked back, but to keep moving forward and iron it out and take personal accountability and responsibility to move forward.
Yeah. And that's, Andrew, those are all awesome points, man. Cause you know how I work and kind of what I do with that process. And that's why I don't really know of any buyers that really fell out of escrow because we just rushed them along, right? Like trying to get them into a house.
It's never happened. It's never happened.
Kind of rhetorical, man. But
honestly, it's never happened. In over 100 families, the only buyers that ever fell out were 2. Well, actually, maybe more than that, 3 or 4. But all of them fell out for a very similar situation, and 3 of them happened this year. COVID-19, job furlough, boom, killed the deal. That wasn't their fault. It wasn't anything that was foreseen. They went furloughed. Guidelines said you can't close unless somebody has a job. The other one was back in the day, it was like 3 years ago, and it's because that person actually lost their job. So, all 4 situations revolved around employment. So that's the only time we've been in contract, you and I, Bill, and actually had a deal that went south, was because of a borrower's employment change. So that is the importance inside of a purchase agreement of having those financing contingencies and those contingencies built into the contract. Because if you lose your job, you shouldn't be on the hook for the mortgage, but it is important to take stock of the reasons why. Up to this year, we only had one. COVID-19 changed that a little bit, but it's okay because they're coming back around. I had great conversations with them over the weekend. So,
and it's important, man, for people to understand that too, with that pre-approval process. Now, you and I have talked a lot about it. I think we might have even done a video or two about it back in the day. We got to do another one, but the pre-approval process is so important because it's to truly understand. Because you can go online, you can get a letter, you can get a piece of paper. There's so many differences between somebody that's just going to give you an email saying, "Oh, you're pre-approved," when you're not. It's the difference is, and this, when somebody comes to me and does you and I and works with you and I as a team, not only do you trust me because you've seen what I've been able to do, but I'm going to validate and I'm going to verify everything on that application. And it doesn't matter, like and I get this because I've been through it, right? But when you're a relatively seasoned, solid buyer in your mind, thinking, "Hey, man, I've got a 720 plus credit score. I make 6 figures a year. I got this, I got that. I'm good to go. I don't need to do all this stuff," right? I've done this before. However, there is things that come up, and I've had it happen multiple times with buyers that they did trust me, and we got them through the application process. And this solid seasoned buyer had some issues on the back end with his credit he didn't know about, or income or whatever it is. So it's truly important to go through that application, get the application done, be as honest as people can with those applications, and then make sure that everything is validated. Income, assets, credit. Make sure we look at it. Make sure we run it through that DU approval. And we get that. Sometimes on those DU approvals, like you had mentioned, Andrew, thank you for mentioning that, was if it doesn't give us an actual approval, it might require what's called a manual underwrite, meaning that system saying, "Hey, it looks decent, but we want an actual live underwriter to take a look at it." And sometimes we have to submit that to an underwriter, which could take a couple of days for them to actually review that file before we actually kick out a pre-approval letter. So what that does with our buyers is it gives them the confidence to know that piece of paper is freaking solid gold. That email, that pre-approval letter, not only is it solid, but I'm going to pick up the phone or email, whatever it is, because we communicate with the listing agents. I'm going to call them and say, "Hey, man, this isn't like Joe Blow who just got a letter online. I have validated everything. We've already got them through underwriting. They're approved. Everything's good to go." And we have much better success. So I encourage people, and Andrew, this, to just, do what we know that works, get pre-approved the right way, and you're going to have more success, and it'll make the closing process easier.
You're right about that. And it's, I've made so many different videos. I mean, I was looking at something yesterday that said that now I've made like 669 videos, including live streams. So today would be 670, by the way, hitting different milestones. We're coming up on 1,000, maybe in a year and a half. But that said, I've talked about a lot of different things and about making an offer and how to put an offer together in a way that's always, going to make it stronger. There's different components the way that you do that. One of them, as you're well aware, I put you on blast. I'm like, here's the loan officer, give him a call. Here's his cell phone, call him, text him, email him. I don't care. If you are the seller, need to talk to the loan officer. Making your loan officer available can win multiple bid situations, because Bill and I've done it several times by the sheer fact of the confidence and the knowledge of knowing that a home buyer was pre-approved correctly. And more than me putting forth a great offer, well written for my client, was Bill picking up the phone and saying, "Hey, if you, your client, the seller, have any questions, please let me know. But here's the steps that I did." So this stuff is incredibly important, because about a third of the time, the homes that you see go under contract will fall out of contract. Number one reason is financing. Number one reason, financing. And more often than not, it was because the loan officer did not take the steps correctly. So whenever you get ready to take your home off the market, if you're a seller and you're getting ready to go into the closing process as a buyer, you want to make sure everything is rock solid, because at the end of the day, what could happen is, let's say that you were like 3 weeks into the closing process and for some reason your deal is blowing apart because you don't have a solid loan pre-approval. Now you're out the money for your home inspection and any additional inspections that you may have made. Now you're out your money for your appraisal fee, and that's the light stuff. And that's already, depending on the appraisal fee and the type of inspection you have performed, that's already anywhere between $1,000 and $3,000 more than likely, just depending on the type of inspections that you've had done. And then if you lose your earnest money deposit as a byproduct, because now let's say that you went over that financing contingency period, your earnest money deposit's gone. So the consequence of not doing this correctly is thousands of dollars. The consequence of doing this correctly is your new home. So I'd ask you and everybody just to simply hashtag JTAB, just take a breath, work through the process, let professionals always, Google the professionals, their online ratings, reviews, and past sales performance and stuff, and reach out to them and listen to the process and work with the process, because we will help you, not just Bill and I, but other top loan officers and other top real estate agents want to see what's good for you and what's best for you. And it takes a process. That's why it takes a village to buy and sell a home. So let's work together and let us help you make sense of the process moving forward. And again, as of this one, 670 videos are out there with me jabbering. So if you like listening to me jabber, well, there's a lot of them. So Carrie said, hey, we had to call to have our federal student loans turned back on. Good stuff. Carrie said, that's the one from earlier. I'll definitely be giving you a call, Bill. Thanks. So expect a call from Carrie. And then Carrie says, I've learned so much from your videos. And thank you, Carrie. Thank you so much for being with us. And Miss Nicoletta, I hope that you're still able to hear if you got your earbud in, because I know you're a nurse and I know you're always a busy lady. So Nicoletta actually had some really wonderful news, and let's read her comment. Nicoletta said, good morning, Andrew and Bill. You both are so amazing for helping and guiding all of us in the process of buying a home. Just letting you know, we followed your advice and we managed to close on our first home with a 2.87% rate. Congratulations, Nicoletta. And just to give you an idea, Bill, they just closed this last week. She texted me a picture of her and her husband in front of their beautiful new home. And it's like, wow, it's amazing. Nice. So we were in contact quite a bit, put her in touch with a great agent over there. And they really love their loan officer. And that was the best of the experience, is the way that worked for them. So Nicoletta, super, super positive mojo, and says, so grateful to have you both go live. So grateful. You guys have helped me a lot to navigate through the bumps in the road. FYI, Andrew is the best realtor. Well, thank you, my friend. Really appreciate
so I'd like to jump on that and say something real quick, because I know, Andrew, you and I mentioned this, but if anybody's watching this video and doesn't understand the value in Andrew as a real estate agent, I think you really got to take a step back and look at the videos and look at everything he's done, everything he's talked about, because I work with a lot of agents, a lot of great agents, a lot of guys that do great things, but Andrew's been putting the blood, sweat, and tears into these videos, and a lot to add just so much value. He's a real estate agent here in Las Vegas and Henderson, this whole Clark County, like Southern Nevada area, and he does a great job. But Andrew's also connected with a lot of other agents across the entire country, to where even if he can't help you here, he can help vet out and help you find a professional, just a professional agent who would do a great job for you somewhere else. So just important to understand, Andrew, he's humble. He doesn't like to talk about himself. So I will, if you are looking at buying or selling or anything like that in any other part of the country, pick up your phone and call the guy, call Andrew, reach out to him, send him a text, and have him vet out and get you in contact with someone else, just because he does get a bit of a referral for that. So it's helping him out, but it's also just showing the appreciation for all the time and effort he's put into all these awesome videos, which, I've been doing this 15 years and I watch them, it's great content. So Andrew, I know you don't talk about that stuff, dude, but that's my input on that.
Well, I appreciate that. You and Nicoletta make me feel good, and I do appreciate the positive mojo. It has definitely been a journey these past 4 years, creating that many videos and working hard to have over 100 5-star reviews and 170 plus families and counting, both buying and selling over the years. So, it's born by experience, and it's born out of passion to help people. And that's what I'd really say is, when you have someone that cares that much, and Bill, to put it in Bill's words, blood, sweat, and tears. Yeah, trust me, I'm constantly learning. I'm constantly learning and nerding out how to make better videos and how to do things better and how to present better. And it's just constant. And Bill knows probably better than a lot of people, because Bill and I talk almost daily. He's a good friend. He's a professional relationship. I mean, that's just how he is. And it's the way that it's flourished over the last few years. But that said, he knows that I get frustrated. He knows that I get angry sometimes, because I'm over here going to task and like, man, why? I'm trying the best I can to help people. And then, some people are pretty snarky or bite back, or I'm like, man, I'm just trying to help. So, I mean, at the end of the day, I really appreciate the encouragement and I appreciate the support on the channel and from you, Bill, and from you, Nicoletta, and to all of our tribe, your Vibe Attracts Your Tribe, and the words of my good friend, Sean Cannell. And I just would like to keep putting it out there and have faith that we can come together stronger and better together than we are not. So it really means a lot. Thank you. So Raj, thank you so much for tuning in. Raj says, hi, Andrew and Bill. As always, love your market insight and information, which you share. Triple thumbs up. Awesome. I am about to close on a loan for a 30-year fixed at 2.99% with 10% down. Want to keep more cash in hand, keeping the current market, given the current market situation. What's your thoughts regarding paying a $100 PMI for this 10% down? Is that the only option which I have? Great question.
No, awesome question. So kind of two things on that. Great rate, awesome rate. Your lender definitely hooked you up with that. That's awesome. If you are within like a couple of weeks of closing, I wouldn't recommend switching lenders. If you're like within a week or two of closing, I would just stick with them, but talk to them about it. If you're a month or more out, give me a call. I can see what I can do. But so this situation is, if you're buying a primary home, that is not a low down payment. If your credit, it looks like your credit's probably pretty decent because that PMI looks low. That's a great rate. If you're buying a primary home, and you want to keep more cash in the bank, I would maybe look at doing a 5% down conventional loan, which still has great rates, great PMI. And then there's also a 3% down conventional loan for first-time home buyers, meaning you can't have had a mortgage in the last 3 years. So to kind of answer that question, look at the 5% down option. Again, great rate, but there is options for PMI. So depending on what you want to do, and depending on credit score and depending on your lender, you can actually potentially roll in your PMI to your loan, even on a conventional loan, meaning that PMI has what's called a buyout cost, to where you can pay roll into the closing cost of the loan, or just increase the loan balance and roll into the mortgage, where you can buy it out by doing that. So some lenders allow it, some lenders don't, but we do. So it's something to definitely look into to eliminate that PMI. Yes, your loan balance will go up, and yes, you're going to pay it over that life of the loan, right? So it just depends on what's most important for you. But if you're looking to lower your monthly payment and lower your down payment, you definitely do have some options. So again, if you're closing 30 days or more out, or right around that time frame, I could definitely help out. If you're not, I would reach out to your lender there that you're working with and see what kind of PMI options they have to, again, either buy it out outright and just increase your closing costs, or roll that PMI into the loan.
Good stuff. Raj, let us know if you have any additional questions from there, because that is some really good insight to just simply ask the question. By virtue of simply asking the question, you stand a 50-50 shot of getting a yes. But last time I checked, and maybe you feel the same way, is an unasked question is always a no. So just pick up the phone and give a call and see if that's something that would be available to you. Carrie, thank you for the updates. Carrie says, I'm in Oklahoma and there are not any good VA loan officers to walk us through the right decision. So Miss Carrie, again, I know that you mentioned earlier in the stream that you're going to be reaching out to Bill. Bill's contact information is right there on the screen for you, so that you can call him or email him directly to review your situation. Bill will be able to help you. And Bill's company, New American Funding, does operate in, I think, well over 33 states, 35 states now. So, it's growing.
46.
40. Oh, okay.
Yeah.
Every time I talk to you, the numbers change. So that shows that New American Funding is becoming it's already major, becoming even more major. So that's awesome. So in other words, if he knows of another New American Funding loan officer in Oklahoma, he'd be able to put you guys in touch and take care of you. And even without that, he can help answer the questions that you have. So it's important to know that we're always here to help. So Carrie also said, my realtor is too busy for us. I just sold a property and I don't feel like he's interested in helping us sell this house and buy another. That irritates me. See, I just start sending up the wrong mojo, and that Marine in me comes back when I hear that, because I was like, how can you be too busy for the person that helps you put bread on your table by giving you the opportunity to represent them? And I think that's where it gets so important to really Google who you're working with and make sure that you got the right people that are aligned with you and that you align with them, so that you guys can work together successfully. At no point in time, in my humble opinion, should a real estate professional or a lending professional come across to a client that they are just too busy for you. Now it's about communication. It's about, look, if somebody called me and said, hey, Andrew, I want to see a house at 9 a.m. on Monday or Friday, I share with them, look, I'm happy to show you a house and I'm happy to get your ducks in a row and ready to go. But here's the thing. I live stream on Monday and Friday at 9 a.m. And I do that for the benefit of you and everybody else that watches during the live and after. I'm happy to schedule thereafter. Now, that's an example of communication. Doesn't mean I'm too busy for them. That's just about a respectful relationship and forming that relationship early on, about understanding when they're best to see homes, or if you're selling a home, what your schedule looks like, and keeping in communication in a way and at a pace that is convenient to both you and the party that you're working with, at no less of a pace than once a week. That's just my humble opinion. And practice, I always tell my clients, I promise you, I'll be in touch with you at least once a week. But in reality, it's probably going to be a lot more. And it normally is. It can be as much as, 10 times a day. But it just depends on what's going on. But the point that I'm making is nobody should ever make you feel that way, Carrie. So if you're not getting the service you deserve, then maybe it's time for you to have that heart-to-heart with your agent and find the one that's going to help you. Raj says, by the way, I do have an excellent credit rating. My closing is the first week of July. I'll definitely discuss this option with the lender. Thanks a lot for the information. Once again, awesome. Cool. Thanks for the update on that, Raj, and congrats on your getting ready to close on your new place. Carrie says, awesome, Carrie. Well, we've been streaming for coming up on about an hour. I do want to say thank you to everybody that's joined in with us today. Really appreciate you being here. Now, if we can build our tribe up together, if we work together and spread the news about what we're doing here and get people turned on to the channel, get people turned on to Bill, and start making things happen together and learn and grow together. That's the whole idea. So Bill, just out of curiosity, do you have any parting shots you want to share with us today?
Same way I kind of always ended, Andrew. Anybody's looking to buy or refinance a home, just be in constant communication with the people that you're working with, whether you're working with us or whether you're working with someone else. Please, open, honest, and lots of communication always helps everything go smoothly. And just stay positive. So many great things going on right now. Maybe turn off the news a little bit and just focus on like what's most important to you with your family and everything else. But we appreciate you, man.
Hey, thank you so much, Bill. So, and lastly, everybody, hey, we'll be back again Friday at 9 a.m. Pacific with Celeste Harvey, and Bill will be back with us next Monday at 9 a.m. Pacific. And in between now and then, please remember that we can make the world a better place if we will be the reason someone smiles today. So let's get to that and inspire positivity and getting rid of negativity. Wishing you guys a phenomenal week. We'll see you Friday.